The call's recording now. Cool. So how's it going, Ari? How's it going, everyone? It's your boy Manny G. Today we're going to be going over a few pairs to mark up. Again, repetition is key to learning how to trade forex and profit and be profitable here. So, like I do every day, I am going to show you guys what I do to mark up my analysis and see if it's a good trade or not to take, right? And then eventually, hopefully, you guys will be doing that on your own. Whenever I send any trade ideas, any markups, whenever I send anything like that on TradingView on you should be trading chat or on the most valuable team chat, or whenever Ivan Febles sends any of his trade ideas, that's just us, just trying to be the example of what you should be doing. So don't just look at it and put your phone away. Compare your own analysis to it. Try and see what we see, right? So that eventually you're able to go on your phone, on your laptop, and make money full time, just like we do. You can do this, okay? So that's what I'm expecting of you guys. Amanda, thanks for hopping on. What's up, guys? Awesome. Frances, thanks for hopping on. Yeah, boy. Cool. Jason, yes, sir. Let's get it. Yeah, guys. Get excited, get pumped up, because this is money in your pocket. Learning this skill right here. Last night I caught 80 pips with GBP CAD. 80 pips. Most people catch that in a week. And the reason I called that is because of the strategy that I'm about to teach you guys. 80 pips, for those of you that don't know, is a lot of pips. There's a lot of points in the market to catch. The Dow Jones, I think, or the S&P 500 or something, a couple of weeks ago crashed about 500 pips, 500 points. Every point is worth 10 cents to millions of dollars. Last night we caught almost a fifth of that, 20% of that in just one day, which is amazing. So let me go ahead and share my screen. If you guys have any questions, feel free to comment in the chats, like some of you guys are already doing. Kim, Ari, Jason, awesome, guys. Let's get this ball rolling. Cool. All right, cool. So the call's being recorded. For those of you that want the recording afterwards, let me know. I recorded the one from yesterday, so let me know if you guys want that one. Cool. So what you want to do is, hold on, give me 1 second. So what you want to do is, one of the first things you want to do, hold on, is go to tradingview.com, right? Like whenever you're marking up your analysis with any given pair, right? You want to go to tradingview.com. Well, I'm lying. Actually, you want to go to imlharmonicscanner.com first. This is at least what I do, because this is where you get the trades from. This is where you get the harmonic patterns telling you when the prices of any given pair is going to go up or down, and then from there you add on top of that your confirmations. This is one of the strategies that's taught by an IML TV educator named Manny Quinones, who I've personally known for 5 years. I've been friends with him for 5 years through other companies that we've been a part of together. And it's funny because he invited me to learn how to trade Forex about 4 or 5 years ago with this other company that used to be called Wealth Generators. And I signed up. It was a hefty price. It was like $350, right? And they didn't give you like anything. Basically, there was just a signals company. They would just email you signals to copy and paste, which was crappy. But I signed up for like $350 per month. 3 weeks into it, he didn't know how to trade Forex. I knew nothing about Forex. I canceled 3 weeks into it. I canceled. He kept on going. He kept on learning, practicing, taking those $350 signals every month and doing his thing. And so did Lizaldo, who's the creator and founder of the Teacup, the Gold Cup, right? So did Nes Vasquez. Nes Vasquez was actually the person who did the presentation 5 years ago at one of our friends' apartments, right? Talking about Forex. And at the time, he knew nothing about Forex. And now, as many of you guys already saw, the guy made $700,000 in the last 6 months and he started with $500. And he's done it in front of thousands of people live online through the company. IML TV. Sean, hey, what's going on, Sean? Thanks for hopping on. These people, they taught me 4 or 5 years ago. Crazy story. You know, I gave up on myself. They kept going, and they're all multiple six-figure earners. Some of them are millionaires. Leo Manaya, for those of you that know Leo Manaya, with the automated trading software that he built, he's a millionaire. He has multiple millions, which is amazing. So I could have been there, but you know, obviously everything happens for a reason. I'm here now, and I've been trading for about a year. So yeah, I mean, it gets to the point where you learn how to trade, you learn the technicals. Trading is easy, guys. I'm telling you, when it comes to like learning what support, resistance, trend lines, a couple indicators to use, it's pretty simple. What's hard for most people is self-discipline, emotions, consistency, and just managing your fear, your greed, managing your risk and your money. These are really the things that hold people back. It's not like learning what buttons to press. Anyone can learn that. Little kids can do it. It's more about growing your own self as a person. Your character, your personality. Your character shows a lot when you're trading Forex. It shows a lot. That people that, just put it like this, people that are successful in Forex are more disciplined people. They have better characters. And even if you're not there yet, even if you don't feel like you're disciplined enough, just know that like Forex will help you get there. Even though you're not there, the best way to get started just by starting is just by doing, taking action. And then you learn on your way there. So yeah, so in this team, most of you guys already know we do a lot more than just teaching people how to trade. We're teaching people how to manage their money, how to manage their emotions, their discipline. We're doing a lot here. We're a family growing as leaders, and we're going to the top, especially 2019 with this automated software that we have going. That's going to change the game. It's going to change your future for you, for yourself, for your families. It's going to be insane. Just imagine a bot trading 100 times a day for you. So that's going to be crazy. But today I'm going to show you guys the back end of what this is all about, the very basics of trading. And if you guys have any questions, let me know in the chats, please. Cool. So this is the website, one of the websites that we have that gives people trade ideas, right? Like, for example, let me log in. Harmonic patterns. These are patterns that are detected in the market. Market repeats itself, right? And these are drawn automatically for you every single day. IML sends you a fresh batch of like 1 to 5 harmonic patterns that this software automatically does for you, because it's scanning the market 24 hours a day for you, right? And obviously the education, IML TV, the coaches, we have like 80 something coaches here. They all teach you how to use, all this stuff. We have this, we have the Gold Cup, we have the web analyzer. Then we have 2 to 3 apps, right? The swipe trades and the swipe coin, which, is made for people that are busy. They can just copy and paste these numbers to the right into the MetaTrader 4 app and submit it within like less than 60 seconds. Continue working or doing whatever you're doing. But this here it's one of my favorites. It's what I use the most, and this is what makes me and a lot of people money. So this is what I'm going to teach you guys today. So what I do is I go in here. Up here you have the time frame right over here. Over here where my mouse is, this is where you have FX Choices, a broker that you can choose. We have many brokers. We're not associated to any brokers, but there's thousands of brokers out there that you can choose from. Main difference between them is like how much commission per trade the broker charges. So meaning spread. All right. So this one is FX Choice, USD CAD. This is the pair that we're trading right now, or that we're looking at right now. USD CAD is the US dollar versus the Canadian dollar, right? USD being the base pair. And then we have M15, which is what it says over here, which is a 15-minute time frame. Then we have BAT, B-A-T, right? This is a type of harmonic pattern. There's several. There's the shark. There's the bat, crab, deep crab, Gartley. There's a couple. And so what you're looking for is, when you see one of these, I'm gonna keep it very basic. So for some of you, you guys probably like know of other things that I teach or that you've learned, in terms of confirming a trade. But I'm gonna keep it like very like keep it simple, stupid, for you guys right now. All right, cool. So I'm gonna take this whole thing. This is what I do. I come in here and I look at a trade. I'm actually gonna change this up to a different trade. I'm gonna go to my broker, which is Traders Way. This is the logo for it. And I'm gonna go to let me go to the 15-minute time frame and see if there's anything there. Okay, so you notice how this harmonic pattern was telling you that the price was going to go up. The entries down here, the stop losses down here, and the target prices or the take profits are up here. 1, 2, 3. Excuse me. Um, you notice how the price, went up and shot up into profit. That's a good thing. That means you made money. But so obviously we're late on that. So let's pick another trade. And 15. I'm checking the lower time frames for now. Okay. So cool. So GBP, what is this? JPY. GBP JPY shot up, right? It shot up a little bit, a few pips, and then it's coming back down. Let me see if there's anything here. Okay, so I see slight divergence. Divergence, it's an indicator, it's a confirmation. It's a confirmation that we use to determine if price is going to go up or down. And it's basically when I want the price to go up, I'm going to draw these two trend lines, right, below the price and then below my oscillator. Okay. My oscillator is this indicator below, this line right here, RSI. Okay, that's one of the oscillators that I use. But yeah, I mean, there isn't a divergence here because what I'm looking for is for these two black lines to go in opposite directions. So if this one is going up, I want this one to go down and vice versa. Okay. But that's with the RSI. Okay, you can change the RSI up. Sometimes I change it up to 9. Okay. And that's what I got. So it doesn't really make a difference because they're still both going to be going on an uptrend, meaning that I do not have divergence. But really, you check divergence with something called MACD. But I mean, while I can do all the work here and add my indicators here, what I'm going to do right now is I'm going to take this entire pattern and trade idea over to tradingview.com so that I can mark everything up there because it's a lot easier. So let me go to GBP CAD or GBP JPY, right? GBP JPY, right? And then I'm going to click on, that's my ticker, right? When I go to TradingView, you can sign up to this website for free. This is where everyone around the world, I mean, there's other platforms, but most people use this website to mark up their analysis that you get from IML. 1 second. Okay. All right, so I'm on the 1 hour time frame. This here is my triple fire strategy. Let me lower the time frame down a bit. Nope, there's no divergence. No divergence. The stochastics is down here, so there's potential for this to go down. If this goes down a bit, it's probably going to go down to here or at the bottom of this wick. Let's see. Yeah, potentially. Okay. But it's respecting this consolidated area over here, which is why the price is stalling right around here. Okay. You notice how everything is like almost perfectly lined up, right? Like the body of the candles are like lined up, right? That's the reason for that is because it's respecting something in the past. Okay. It's respecting something in the past, even though there's wicks. That's, that's life. The reason the price moves for anything, whether it's stocks, crypto, whatever it is, it's because of humans. Humans aren't perfect. So the Forex market is never going to be perfect. Okay, so I'm actually not really too, fond of this trade, but let me see if I see anything else. Let me change the strategy up to the simple scalper. Okay, so the Bollinger Band is stretched. Parabolic SAR is telling me it's a sell. Stochastics, RSI. Okay. See, what I don't like is that I don't really have like a solid support. Like the support isn't that strong for me. you know, I like really strong supports like this one here isn't doing it for me. Maybe if I was trading binary, it would, you know, because then I would go down to the 5 minute and see that, you know, it's bouncing off of a support right here, right? And that it's well, what I don't like is this parabolic star is telling me that the price is going down, stochastics down, yeah. So, but you know, but it has a solid support, which I love. Okay, a support line is basically when the price is hitting the floor multiple times. So you notice how in this area right here with my color, where my yellow box is, right? You notice that how like the price went up to this red line, and you notice how it's doing it again right here. That's support. Okay, that's support because it's kind of like you're in a building trying to break through each floor, trying to get to the next floor, right? From the first floor all the way up to the 16th floor, right? If I jump up and I try and break through the ceiling, I'm gonna have to punch the ceiling a few times. You know, that is, you know, if I'm Superman. Obviously, I can't do that, but I'm gonna punch through it several times in order for me to make a hole through it so that I can jump up through the ceiling to get to the next floor. And when I do that, more than likely I'm going to rest a little bit. And when I punch through that ceiling and I get to the second floor, I'm probably going to stand on the second floor now, right? Which means that what used to be my ceiling is now my floor. Okay. And I do that again to get to the third floor, the fourth, all the way up to the 16th, for example. Um, and in Forex, the market is constantly trying to do that when it's going up or down. Okay, so let's say I'm on the 16th floor and I'm trying to get to the first floor. What I'm doing is I'm stomping on the ground, right? Jumping all the way up to the ceiling and then stomping on the ground until I make a hole in it so that I can, you know, get down to the 15th floor, right? So the market is constantly trying to break through support and resistance every single like second, right? It never stops. And so whenever you see that the market hits a support or a resistance or a trend line, right, a couple times, then you know then that's telling you something. If it hits it, you know, for the second or third time, you might take it for a pullback or a retracement, right? And so for in this case, I would put in a buy right here and buy it, right? But if it's hit it, you know, so for example, let's say it comes back down and it hits it again over here, then I'm gonna have to watch out because usually on the third or fourth try, the market usually breaks it. It's the same thing, you know, going back to my analogy, if I'm punching a ceiling, I'm probably going to have to punch it a few times in order for me to break a hole through it, right? So in this case, the price has to hit support, resistance, and trend lines a few times before it breaks it. And it usually breaks it on the third or fourth hit. All right, so that's you know what I wanted earlier. Although you know GBP CAD is catching some pips, you know, here and there, but I'm not. I'm gonna look for a better trade, right? And so again, this is the process that I go through, you know, all the time, which literally takes you know a lot less than an hour. I know I usually do these calls in an hour, but normally speaking, this is something that you can do in 5 minutes, right? Once you already know what you're looking for and what to do, you can do this in 5 minutes. And, you know, I got to this point after 6 months of being an IML. I got to the point of, you know, just coming in here to the website, going to the Gold Cup, going to, you know, Swipe Trades or whatever, taking all these trade ideas and making it my own, you know, comparing my analysis to it and seeing if it's a good trade or not. And with the help of a team, right, because as a team, we all grow together, achieve more, something like that. We all achieve more. Um, then you know eventually you'll be able to do this just like me, or better. I've had people come in and outperform me, and I put them onto this. Hence my boy Ivan. So soon Ivan is going to be doing these calls as well with me, you know, a couple times a week, just like I do, so that he can show you guys what he does, because he's really good. All right, cool. So let me look for some trades. Okay, so this one's already moving somewhat, sort of, not really. Didn't quite hit stop loss, but it looks like the scanner has not detected any fresh patterns yet. You know, so I mean, sometimes you know, obviously this happens. Yes, so USD is going. Went down and hit the stop loss, but I'm thinking that it's probably going to reverse around here. one thing I do often is I look at the DXY. DXY, this symbol here is the symbol for the dollar index. So wherever the dollar index is going, all the USD pairs go. So USD pairs, right? Just educate you real quick. USD pairs are, for example, USD JPY, GBP USD, AUD USD, USD Chef, NZD. You know, all these pairs. So if USD is the first, is like the base currency of the pair, then wherever the dollar index is going, whatever direction is going, those pairs that start with USD are going in the same direction. Okay. Now the pairs that end in USD, like NZD USD, right? Like GBP USD, AUD USD, right? These pairs are going in opposite direction of the dollar index. Okay. So a lot of times what I do is I look at the dollar index to see where's the dollar going today. You know, what is it doing today? And it does not matter what Trump says. It does not matter anything, because those types of things are like long term. You know, I mean, sometimes you might get spikes, you know, in like a given hour, but for the most part, I'm only doing technical analysis, and that's it. I don't watch the news. I don't have time for that. There's too much negative news. Yeah. So where's DXY going? Okay. Cool. So it's getting close to. Let me take all these indicators out. That's very distracting right now. Okay. Cool. Oh shoot, I'm on the 5-minute time frame. We go up to the 1 hour. Oh. Okay. Okay. Check this out, guys. Now, the market is never perfect. You know, the USD pairs don't follow the DXY index like to the T, but you know, it moves in that general direction, which is, you know, why I use DXY as an extra confirmation. Okay, so check this out with USD JPY, right? It's on a 5-minute. Remove all indicators. Let me this up to the 1 hour. Okay. Okay. You notice how there was a huge candlestick? How there's a huge candlestick right here dropping, right? And then you go to the DXY, and then you notice how there's a huge candlestick right here dropping, right? Like something happened that day. Was it when Trump was speaking recently? Was he had some sort of
this morning the pair dropped at 8 of
yeah
8:30. It dropped.
Oh, okay, so there was news, right?
Pairs up.
Exactly. So so like GU went up, and like all these pairs that end in USD went up, and the ones that start in USD went down. So you know, like, you know, obviously my point was USD pairs follow the DXY. Okay, you guys got that. So looking at, what was I looking at over here? USD, right? If it's gonna go up or down. I would just, you know, mark this up straight up. You know, I would mark this up. I'm looking at, you know, for market structure right around this area here, right? Because you notice how the price is rejecting here, 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 you know, kind of shot up below, you know, over here, right? And then it reversed right here. And, you know, and if I want to stretch this box up, right, to use this wick over here with this, where my cursor is right here, as a, you know, some sort of reversal, because it was going down and then it shot back up, right? Then if I stretch this out, right, and, you know, I try to compare, you know, what's happening now with what happened before, then this gives me some sort of a, you know, um, reason to, you know, think that this is going to go up. But this is not enough. Okay, this is not enough, at least for me. I want the trade to scream at me. Okay, and not every day do I trade. You know, there's the potential to trade is there, you know, every day, like every second. And if you want to stay stuck in front of a computer, all day looking for it, you can do that. But I know what I'm looking for, and if I don't find it, I don't trade. But if I do, oh yeah, I'll take the trade. You know, but in this case, you know, in terms of market structure, this is all I see. All right, cool. So let me draw a couple things. I'm gonna draw something over here. Okay. So even though normally speaking, you would draw a trend line above the price on a downtrend, I drew it below just because like you can, you know, and then you can, you know, kind of like see like what's going on. And I'm drawing it based on this wick over here and this one, you know. So let's just pretend none of this happened. And look, it's actually respecting it for the third time. So it hit it, you know, 1, 2, 3, or no, like this would be the second time. No, this would be the first time. This would be the second time, right? And so that I feel better about this going up now. Okay, I do. And then with DXY, okay, let's see why this would be going up. Because if this is going up, then okay. So like I said, so like I showed you guys earlier, there's a support right there. You guys see that? How this red candlestick, this blue candlestick finished like right on this red support line. And then you see this red candlestick and this blue candlestick, how the body of it, I know the wick went over, but I'm talking about the body right now, reversed and like finished. Like this candlestick, this red one here where my cursor is, finished like right on the red line, and so did the other two, right? And then you notice how the blue candlestick is doing the same thing. Yeah, wicked over it. The wick means that the price in the 1 hour, notice how we're in the 1 hour time frame right now, right? In 1 hour, because every candlestick takes an hour to finish. In that 1 hour, the price shot up all the way up here and it shot all the way down here. So that's how volatile it was. You know, it shot up over here, but it opened down here where the red line is, and it closed right up here. Okay. And then the next one opened where the last one left off, right? And right now it's, you know, up here. And there's 28 minutes and 50 or 28 minutes and 48 seconds left now. All right. So you guys get that? So that's why I drew a support right there. Cool. So hold on. Cool. Yes. So I broke it, right? It's retesting the top of this wedge here, this falling wedge. And then now it's like bouncing off of it and like potentially go up. Another thing that I do is, what is the currency meter? No, Frances. What is it? The UK currency meter? Live charts, right?
Livecharts.co.uk.
That's right. Perfect. Okay. So there's other websites just like this one where you can go and see the strength of the currencies. Okay. It usually just takes me straight there, but where's that button? Strength meter. Should be. You guys see it? Anybody? Comment in the chats if you see it. Strength meter.
Oh, you gotta go to Forex on top.
Yeah.
You got Forex on top?
Oh, yeah, this
Yeah.
one right here. And then the currency meter should pop up somewhere.
Daily currency chart page, is that it?
Currency meter. Anybody see it? Oh, currency meter right here. Perfect. Okay, currency
There you
meter.
go.
So this is it right here. Now, this is where you get to see the strength of the currencies. And you always want to match up a very weak currency with a very strong currency. If you match up two weak currencies, then you're going to find that that currency is consolidating. That pair is consolidating. And if you match up two very strong currencies, then you're going to find out that that pair is consolidating. It's not going to move up or down because they're both strong and they're fighting against each other.
Refresh always before.
Yeah, and then always refresh this page if you keep it open. It's kind of like playing tug of war, and you have two very weak people or two very strong people, you know, tugging the rope, and you know, no one's winning. It's kind of like a draw. So you want to match a very weak currency with a very strong one. So in this case, we're looking at USD JPY. which is the wrong pair to look at right now because we're finding that these two pairs are going to consolidate. It might move a little bit during the London session. So that's another thing. Like in Forex, there's different sessions, right? There's, you got the London session, which starts, I'm in New York, so right now it's 9:34 p.m. So London session for me starts at 3 o'clock in the morning. The New York session starts at 9 o'clock in the morning. The market's here open, right? The Australian session opens up at 5 o'clock in the afternoon, right, in the evening. The Asian session opens up at 8 o'clock at night, okay? Those are the four sessions that most people trade in. Well, most people like to trade London and New York. But for these sessions, right, these pairs, like for example, like the euro and the Great British Pound, these two pairs, they move a lot during the London session. During the New York session, the US dollar and the Canadian dollar moves a lot, right? Because they're in our time zone and their markets open at 9 o'clock in the morning here. For the Australian session, obviously, the Australian dollar tends to be a little more volatile, allowing you to catch more pips. And then for the Asian Japanese, Chef, NZD, NOK, and DKK, I'm not sure of. But, obviously, Chef is in Europe, right?
Swiss franc.
Yeah, obviously, Swiss is in. So, yeah, that's Europe at 3 o'clock in the morning. Although the US dollar tends to move during the London session too. Okay, it just does. Now you can go in here and match up, which one is strong, which one is weak, and then use that as an indicator to see if the price is going to go up or down. What's another thing I do? Another thing you can do also is go to Forex Factory, right? ForexFactory.com to look at news, right? And the yellow and the orange folders, they don't really matter. I mean, they do, but what really matters is the red folders. The red folders are whenever there's like heavy news coming out that's going to make any given currency move a lot. A red folder pops up here on ForexFactory.com. So whenever you have this, you don't want to trade this. If you're a beginner, you don't want to trade these sessions. This is more for like people that know how to use this to catch pips. So I wouldn't touch this. So if you see this at around that time, don't touch it. So for example, today is Wednesday, right? This morning here in New York at 10 o'clock in the morning, Canada had some sort of news, as well as at 10:30 in the morning, the Great British Pound, so London, or Britain, and US dollar at 2 o'clock. So in these times, right, if I was new, I wouldn't have like touched anything here. I wouldn't have traded. I would have just left it alone and see what happens afterwards, and then go from there. Because you don't know if the price is going to be good or if the news is going to be good or bad. I'm making the price go up or down. A lot of times though, the news that comes out, it's really coming out. So to push so that they can, so that the market, right, so that economists and the government, whatever, can push the price of a currency to go in a desired direction, based on politics and stuff, so a lot of times, like this stuff comes out, just so that they can like move it in the direction that it's supposed to go in. So if you have like market structure set and everything is telling you that the US dollar is going to go down, and it's been going up for a long time and it's due for sell, then what's going to happen is that if there isn't a lot of contracts, if there isn't a lot of people all around the world putting in sells, then what's going to happen is that they're going to find a reason to go up in the podium and give the world some news, telling them that something about like unemployment increased or something, whatever, and driving the price of the dollar down for the day or for the week or for the month or for the year. It just depends, right? And so, but this is a whole nother way of trading. So for now, like what we teach people to do is not to trade during the red folder sessions. Which is easy to do, right? To be honest with you though, like I really don't pay attention to that. I kind of just like mark up my analysis and just go in. I put in pending orders or market execution. I put in my stop loss, right? My stop loss, my take profits, and I literally forgot. I forget about. I just go on and live my life. That's what I do. And that's it. If the price is if it's a losing day, it's gonna be losing day. So what? Like I'm gonna be in profit because I'm practicing proper risk management. Okay, so it doesn't really matter. Like if the analysis tells you that the price is going to go somewhere, trust in the analysis, trust in the process, trust in your trading plan and your trading journal, and the team and the education, everything, and just set the trade and forget about it. Go on with your life. You don't have to focus on trading all day long. And if you lose, you lose, right? You're going to lose, whatever amount you set yourself out to lose, right? So 30 pips or whatever. And if you win, you win. You're going to win 60 pips times whatever lot size you put in there. And that's it. It doesn't have to be that hard. Cool. So I know I'm talking a lot. I know you guys want some trades, right? But does anyone, let me pause for a second. Does anyone have any questions or anything at all? I don't want to just continue rambling on. So who do we have on this call? I'm about to just pick on somebody. I'm going to pick on you right now. I'm going to be that bully. Nah, I'm just kidding. Cool. So no questions? Cool. So I'm going to just keep rambling on. All right. I think we have a question. Hold on. Yes to keep rambling on, or yes to pick you? Question. Perfect. All right. What's the question? Harmonic scanner. Yes.
Something you heard. Right?
You know what? Yeah. If you want to unmute yourself, go ahead.
Okay, hello?
Perfect. Hey, how's it going, Ari?
Okay. Oh man, I'm sorry. All right. I just want to say thank you, Manny.
Yeah, no
And
problem.
number two. So the harmonic scanner, how do you know what direction it's gonna go in? Is it because you of the TPs? Like how do you know that it's gonna go back up? It looks like it's going down.
Yeah, I'm looking at the history. So I'm not just basing it off of, there's a downtrend going on, but I'm basing it off of what happened in the past. So there might be some support area right here, right? And I'm looking at the RSI, and the RSI is, the RSI is at 26. Stochastics, no, this isn't stochastics. So you don't want to just like look at the candlesticks and just because, like, what are you basing it off? What are you basing it off? Like, why do you think that the US dollar, USD JPY is going to go down? What's your analysis?
Well, I use the moving averages and I use RSIs and candlesticks. I try to analyze the candlesticks too,
Mm-hmm.
but
So, mm-hmm.
I just get confused when I see it going in the wrong direction of what it's giving me, like the signals.
Yeah. So okay. So this is what I would do if I were you. As soon as it hits the stop loss, or as soon as it's like going down below the D point, then I wouldn't take the trade. Me, I was just using it just because there's no other trades for me to analyze right now. But normally speaking, what you want to do is you literally just want to, like when the trade is at, oh, okay, is this a new trade? All right, I'm going to try and mark that one up in a second. But when the trade is AUD Okay, so when a trade is like right here, right? This is where you want to take the trade. If it's anything below that, then I would just, forget about the trade and move on to the next one, in the beginning stages. But once you get, like a lot better with it, then you can definitely like forget about this harmonic scanner, take it all to tradingview.com and make your own analysis on it to see if, this pair is going to go down or not. So for example, like actually USD JPY is what you were saying that was going to go down. From what I see here, and I forgot I had marked this up, is a support area. Although it's not strong, what I also have is a trend line below the price, right over here, touching from here to here, and then it's touching it right here, right, for the third time. Telling me that, and it rejected it twice because you see these two little wicks over here, right? Telling me that it might go up. But that's just market structure. That's just pure naked Forex. On top of this, what you want to do is you want to look for more confirmations, right? You normally want to have like 3, 4, 5 confirmations in order for you to take a trade. So boom. So check this out. I'm on the 1 hour time frame, right?
Ooh, look at that.
I'm on the 1 hour time frame. I see that the stochastics is down here. It's not ready because I don't see it crossing yet. So the price is probably going to stay down there for a bit. I see the I can hear the background noise, Ari. If you want to mute yourself first. Okay, perfect. Thanks. One step ahead of me. So, and then over here, I see some sort of divergence, although I'm not going to count this one. I'm not going to count this divergence just because I don't have a positive, negative, positive, okay? Or a negative, positive, negative, which means that, you notice how like these blue lines, right? The histogram is below and then above. You see below, above, below, right?
Yeah.
What you want, right, is you want to have an above, right? A positive histogram right up here, right? So I have like this below here, but I don't have anything up here and then below again in order for it to count. In this case, from this point, from the beginning of this trend line here below the MECD to the end over here, right? I don't have a positive. All I have is negative, straight negative. So, and you guys are going to learn this, right? What you want to have is a negative, positive, negative, and then draw the trend line, and that's what counts, right? But in this case, if I did have it, then this would be a solid divergence. Although I can take it down to the 15-minute and see if I find it there. So let's see. And boom, what do we have? We have a positive right here. I'll take this. It's not a perfect positive. Like ideally, you'd want it to be like freaking perfect, but like I said, Forex is not perfect. So it's all, perspective, judgment, and just like, training your eyes, and then eventually you'll be able to see stuff that no one else can see. So this is what I see. And, so that's some, definite slight divergence. The Stochastics is down here. It's crossing on a 15-minute. It's not crossing yet on the 1 hour, right? But, on the 15-minute, you might catch some pips. And then just, let it ride. Right, and then you have, the blue sky. The blue sky is another indicator that I use. Don't tell me what the science is behind the blue sky. It's just an indicator that tells you when to long, when to sell, when to buy, when to sell. But you don't want to use it alone. You want to use it as an extra confirmation along with other confirmations. Okay. And then so in this case, like you would wait for maybe something like that to tell you that the price is going to go up. Okay, so right now it's consolidating on the 5-minute time frame, right? And by the way, the blue sky indicator, you only want to use it on the 15-minute or lower. Okay, so let me go back to the 15-minute and see if I see anything there. And then another thing that I use is I like to use parabolic SARs. So we'll get into that in a minute. But yeah, I mean, look, like this is a good trade to buy. You have this trend line down here. You have, somewhat of a support, which I don't like. Market structure to me is very, very important. And you have, stochastics, you have, divergence here. And like I said, the trend line, this black one here. Let me change the color to it. This red one here, right? Yeah, so that's what I have here. Although it might not be ready yet. But to get another confirmation, let me see if this is going to go up. So like I said earlier, there's a support in the US dollar index, meaning that it might go up, but that's just one indicator. So let me see a couple more things. Let me see if I can find several confirmations for the dollar index for me to see if it's going to go up, right? And so this is what I would do. Obviously market structure, which is support, resistance, trend lines, is the most important thing, is what you want to do first, which is what I have here, which is, the support. Okay, which is the support over here. But what I'm going to do is I'm going to add some indicators to see if I find, okay, so stochastics is down here. I have stochastics down there. On the 1 hour, I don't really have any positive histogram up here for me to, look for. But shit. Okay, so I think that there might be divergence on the 15-minute. Let me see. Boom. Divergence, slight divergence, not really, because I don't have a positive. Damn it. But, you know, I mean, this is where, you know, your judgment call comes in, you know. I don't have a positive, but I definitely see that the histogram here is lower than the histogram over here. But the price over here, the price over here to the right is lower than the price over here. So it's like an opposite direction. So if I was to take this off, if I was to, huh? If I was to, you know, draw this trend line just like this, right? Like normally speaking, in order for there not to be a divergence, the trend line would have to be going in the same direction, right? Let me thicken this up a little bit. In the same direction. But that's not the case. It's actually going in the opposite direction. Boom. Opposite direction. Look at that. You know, telling you that there's divergence. For those of you that don't know what divergence is, IML Academy, they teach you everything. Divergence for red. Boom. Divergence. For bullish, when the price is going up, when you're looking for it to go up, you draw the trend lines below the price, below the MACD, and if it's going in the opposite direction, then you either have a regular or hidden divergence, or if you have a double bottom with the price and an uptrend with the MACD, then you have an exaggerated. So boom. So okay, so on the 15-minute, you know, it's somewhat already moving up, but the price isn't. So I'm not liking that too much, but on the 1 hour, stochastics definitely, you know, going to be crossing soon, hopefully, and going up. So there's potential for the DXY, for the US dollar to go up, which means that the US dollar might go up too, right? And so that's just, you know, that's just that, right? But normally speaking, what I want you guys to do as beginners is literally just like go by what the harmonic scanner says, and then use the triple fire strategy on top of that, which is this over here, right? Hold on. What am I doing? USD, yeah, over here. And that's it. And then, you know, every morning, you know, obviously you're gonna get educated on so many other things. This isn't everything when it comes to Forex. Like there's so much more, you know, to learn. So, you know, but this is like easy, quick to learn, very simple, and it's like 80% accurate, you know, and it's a beautiful way to trade because it doesn't require a lot of time, and you just get into it and get out and make your money, you know, which is what I do. So that's it, you know, just triple fire. This is it. Stochastics, divergence, blue sky, market structure, you know, confirm that there's no news, right? Look at the strength of the currencies, you know, pair up a weak one with a strong one, and yeah, and then just go by this, right? If it's already past that, like for example, USD JPY, it's already in the negatives, right? Don't take the trade. Don't take it. Why? You know, why risk your money if you're unsure? You know, just take the good ones. So, does that answer your question, Christine? Or any more questions? It's just, you know, it's just all about confirmation. It doesn't really matter, like, you know, like if you see all these, you know, candlesticks, like the price can't go down always. In fact, when there's a huge impulse, look, let me do something real quick. I'm gonna put in here a Bollinger Band, right? I'm gonna put in there a Bollinger Band. I'm gonna switch it up to my settings real quick. Well, I don't even need to. Look, you notice how the Bollinger Band stretched? You notice how over here and down here, like it's stretched? Whenever the Bollinger Band stretches, that means that there was a huge impulse in the market. When there's an impulse in the market like this, there's always a correction, right? The market can't always just continue going up forever or down forever. There's always a correction, right? And so when something like this happens with a whole bunch of candlesticks, like the entire day today, the US dollar was going down, right? There's going to be a correction. Let me show you one from the past, right? So check this out. You notice how, okay, so you notice how there was a huge impulse here, obviously with this huge candlestick, and there was a correction here, and then eventually the price climbed all the way up to here, right? Now what I do, and this is where Fibonacci comes into place, right? When there's a huge impulse, there's always a huge correction, or somewhat of a correction. So what I do here is fib retracement. You see that indicator there. What you do is you draw it from the top of the trend to the bottom of the trend, right? I'm gonna draw it. Oh my God, hold on. I'm gonna draw it up to the bottom of the body. Price labels right. Okay. You guys see the numbers? Let me try and zoom in a little bit.
Yeah.
Okay. So, yeah, it's too many colors on the screen.
I think the indicators, the Bollinger Band's making it harder to see.
Bollinger Band, so let me delete the Bollinger Band.
Manny, point out a Bollinger Band again, please, would you?
Okay. Okay. So, I'll put it back in just a second.
Okay.
So you see this huge impulse here, right? You notice how the price went up to here, right? Went down, up, down, right? But generally speaking, like it touched the 50% level. This area right here, let me try and draw it out for you. This right here, right? This is the 50% level. I'm not sure if you can see that. Sorry about the colors. I don't feel like changing it. It's gonna take like a whole 5 minutes, or not. But you guys see it, right? So huge impulse correction. It came down, and then it was kind of like consolidating on an uptrend all the way up to the 50% level before it came down, and then eventually it broke it. It broke it. It went up to the 618 level. This is the 618, right? And that's the golden ratio. That's where 70% of the time the price, whenever there's an impulse to the downside or to the upside, the market is always going to correct itself. Not always, but 70% of the time going to correct itself 61.8% of the way back. Okay, so if I run 100 meters down the track, right, then basically Fibonacci is what tells you that I'm going to run back. That normally it's kind of like a rubber band. When you expand it, it contracts, right? If I run down 100 meters, I'm going to run back 61.8 meters, 70% of the time, and the other 30%, 50%, back. I'm gonna run back 50 meters or 38.2 meters, okay, out of 100, which is 38.2% or 50% or 61.8% of the way back. Okay. Yeah, no problem, Sean. No problem. So Bollinger Band. So yeah, Bollinger Band. Just another indicator that you can put in. I'm gonna show it from here since it's easier. Let me remove all indicators. And then, I have my template already set for my Bollinger Bands. I set up a whole bunch because these lines up here and down here, for me, I use them as standard deviations for those of you that took stats. So you see this huge impulse and a correction, right? And then, but the market wanted to come down. So there was a, impulse to the downside. It corrected about 38. This right here is 38% of the way, which I'll show you right now. So let's see. I can just see it like eventually you're gonna just like see this stuff like before like even marking it up. Look at that. So 38, and I didn't even do this before. And look, the market retraced back exactly to the 0.382 level before it continued going down. So that's what happens. That's another confirmation. But hey guys, time's up. If you guys have any questions, let me know. I'm here to help. Anytime you guys like, I hope you guys got some value from this. But hey, I'm here for support, but I'm also here as an example. I came in here with no experience. I came in here with no experience. Zero, nothing, nada. I don't even know what Forex meant. When he first mentioned it to me, I was like,
so good.
for my ex. Yeah, like I didn't know anything. So this can be you. This can be you. You can make a lot of money here. And put on your, teach this to your kids, to your friends, family, whoever, put them on. So easy. Plus we have like this new like software that's automated, that's like amazing. You know, like so many great things are happening for 2019. So don't get left behind. Don't watch. You know, take risks. Invest. You know, what are you gonna lose? A couple $100? Come on, it's worth it, right? And you know, like that's how life is. You know, you just come in, you test it out, forget about not having time, not having the money, just make it happen. You know, this is your life, your family, your future. What's more important, saving money or that? You know, so definitely, you know, come in, let's make it happen, let's trade. And I'm here if you guys have any questions, anything you guys need, I'm always here to help. You guys already know that. So thanks for, you know, hopping on, staying on. um and I'll see you in the chats. All right, guys, have a good one. Take care. God bless.